All right, y'all, in this session, we're going to be talking about Fibonacci retracement. One of my favorite tools, Fibonacci retracements. So make sure to like the video, subscribe to the channel, and click the bell for notifications because you do not want to miss one of these free trading course sessions. And guys, this course is sponsored by Antarctic Exchange. Literally, we are changing the game when it comes to trading crypto. This is a 100% decentralized exchange that functions on the front end like a centralized exchange with a mobile app, with every functionality you could want and more. In fact, this exchange never fails to just fulfill all my desires for everything I wish I ever had for an exchange. It is here in Antarctic, including the colors and everything being fully customizable. What's most important about this exchange, guys, is it's decentralized. So you're holding your own assets. You're not depositing money onto a platform. You're keeping everything in your own hot or cold wallet completely off the exchange. What makes this also very special is the fact that shared ownership is available with the exchange. All traders on Antarctic get a portion of the trading fees that the exchange makes. You're trading on the exchange is giving back to you. You can even become one of the liquidity pool providers and make basically liquidity pool profits, which is like, you know, a typical exchange has market makers that make money when people get liquidated. Well, in this exchange, all us traders make money when we get liquidated. So we're trading, we're benefiting each other by trading on the exchange, sharing in the fees. Speaking of fees, if you sign up using my link, you get the lowest fees possible for any exchange right now. I mean, 0% limit order fees, 0.015% market order fees. If you are looking for a thriving trading community with pro traders to help you along on your trading journey, check out jasoncaspertrading.com to join the VIP Discord, the best trading community in the world, where myself and other instructors, although we do not give signals, we do walk you through our live trading every single day, multiple live streams a day, 3 or 4 live trading streams a day, where we're telling you exactly what we are looking for. And if we see a trade, we don't give signals, but we let you know what we are doing according to our analysis so that you can find confluence with your own trading analysis. Of course, inside you will find myself and other instructors, such as Thor, one of our great instructors, live streaming every day. Boyan, man, in one live stream, dude took 4 scalp trades, absolutely crushed it. Of course, White Phoenix is in here as well, crushing it with his charts and his daily live streams. And of course, I'm in here too. We're trading Bitcoin, altcoins, stocks, Forex, commodities. You'll find it all in here, plus every single month. We do games where we give away thousands of dollars in cash prizes. And no matter what time of day it is, you will find conversations going on, people to help you, and our advanced TA channels where seasoned traders who have been vetted by the team are posting their analysis, their levels, and their ideas to help you on your trading journey. jasoncaspertrading.com to join the community. Links to this are in the pinned comment and description. Go ahead and click the link to join the best trading community in the world. All right, so let's get into Fibonacci retracements. Last time we talked about market structure. We talked about how when we're in an uptrend, we go up a lot and then we get a retracement. Then we go up a lot, and then we get a retracement. Then we go up a lot, and then eventually we do something like this where we change market structure and we start to make lower highs and lower lows, right? And then what happens is we come down a lot and then we get a retracement. Then we come down a lot, and then we get a little bit of a retracement. Now, Fibonacci retracement tools allow you to know where you're looking for the trade in the event of a retracement. All right, what do I mean by that? I mean this. If you are looking at a downtrend, a local downtrend, like we talked about last time, high, low, lower high, lower low, lower high, lower low, lower high, lower low, then all of a sudden we make a higher high. You're like, the trend is changing. But where do I look to get into my long trade when we get our retracement and then make our higher high? This is where Fibonacci retracement tools come in. You're going to come over here to Gone in Fibonacci tools. You're going to click Fibonacci retracement. All right. It's a drag and drop. What you're going to do is you're going to find exactly where the price made the low. You're going to click. Then you're going to drag it to the place where price made that first higher high. And then you're going to click. And then this is now going to give you your area where you look for that retracement. Now yours might look different. So here's what you're going to do to make it look like mine. You double click it and it's going to have all this stuff checked. I uncheck everything. I uncheck the trend line. All I like to keep on mine is the 618, the 786, and the 886 fib. Now also, you're going to come to a random box, double click it, and put 0.65. All right, and then click OK. This is how your fib should look after you do all that stuff. Additionally, make sure to take off the background colors, right? Some people keep these ugly background colors on that look like this, like this. Ugh, right? Just turn all that stuff off, right? Prices, levels, this will tell you the exact price of these levels, which is important. So like it'll show you, for example, that like the 0.786 fib is 92,045, right? So this is how you're going to do it. All right, now you're always going to look for, when you're looking for support, you're going to pull your Fibonacci from a low to a high, right? When you're looking for support, when you're looking for a higher low in an uptrend, you're going to pull it from that first impulse to the top, right? And then you look for your retracement, and then, all right, so when you're looking for support in an uptrend, right? Let's say we've changed market structure bullish. You pull it from bottom to top, and you look for that support. You can do it from the first low to the first high. You could do it from the second low to the second high. Here's another thing you could do. You could pull it from the first low to the second high, right? There's many different ways to pull fibs. In fact, a lot of times you'll pull a fib from the first low to the second high, and then you'll pull one from this low to the second high, and you're just going to kind of stack your fibs, and you can look for fib confluence, where you can say, look, this area right here, I have a 618, I have a 0.65, I have an 886, and I have a 786 all in one zone. You can say, wow, we have a lot of fib confluence right here in this box, right? But for the sake of entering trades, what we're going to do is, when we see that we have changed market structure, we pull our fib. Now, this is a prime example of looking for a long trade based on Fibonacci. Look at what's happened here. We were in a strong downtrend. We made our high, we made our low, we made our lower high, we made our lower low. Now, what's happening? Higher high. Very interesting. So what am I doing? I'm pulling out my Fibonacci from the low to this first higher high. And I'm going to draw a box. For Bitcoin, the most common places to retrace are between the 618 and the 786. So I'm going to go ahead and draw a box between the 618 and the 786. All right. Then I'm going to go ahead and I'm going to take a look at the volume here. And I'm going to draw this. Oh, man. Okay, so we can see it's coming down below the fair value zone. That's great, right? We're looking for it undervalued right into our Fibonacci retracement level. Let's go ahead and pull a more local range here. Wow, would you look at this? So right here, guys, we can see something beautiful. We can see that locally, the price is considered overbought, overvalued. And if we come back into the range, chances are most probable we come down to the undervalued zone of our sideways range. And what do you know? The value area low of this local sideways range lines up perfectly with the Fibonacci. All right, do you see how that works? Now, look at this. On a very low time frame as well, we have the 1 hour chart here. You know, I don't usually look at levels on the 1 hour chart, but you can see we have these two candles opening and closing right here, an untapped 1 hour level. Let's go to the 4 hour and see if we have anything there on the 4 hour. You know, we have a 4 hour level also right here, right at 97.60. And so what we're doing here is we're building confluence now at the low of this range. We've already know that we've changed market structure, so we've made our higher high. Our senses are tingling. We've changed market structure. Now we look for that higher low, so we can look for the long. And look at this, all right? It's just historic support as well, right? Even without Fibonacci, even without volume, even without the 4 hour and the 1 hour level, we're literally just coming back down to the bottom of a sideways range. Like we came, or are currently right now at the top of the sideways range, then we'll come back down to the bottom of the sideways range. This is now where we look for our long trade. So what we've done is we've seen that the market structure has changed, and because the market structure has changed, we're expecting a retracement. And because we have Fibonacci retracement levels, we know the price is most likely going to retrace down to around that 618 to the 786 Fibonacci, where we also have multiple confluences. So now we can plan a trade in the event of a retracement right from the Fibonacci 786 zone here. And then we can say, because we've changed market structure, we actually expect another higher high to come in, right? Maybe coming up to around $100,000. Because again, we were in a downtrend, high, low, lower high, lower low. Now we made a higher high, we look for the higher low, then we look for the higher high, right? And so this now gives us our trade setup, and the $100,000 is not just any arbitrary level, right? We go to our chart, and what do we see? This is resistance, 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 and so we're just looking to take a trade from the bottom of a very large range to the top of the large range. See how that works. All right, then again, we can take this, And we're basically just looking at, now we're getting our entry on a small time frame here, but everything lines up perfectly as well in the high time frames. You see how that works? So again, a step-by-step process. We see the change in market structure. We know we made a higher high. We pull out our Fibonacci. We look, where would we want to see that retracement to? We check our volume. We see, aha, value area low lining up perfectly with our Fibonacci complements. We check some high time frame levels. You know, we don't have a daily or anything, but we have a 4-hour level. We have an hourly level. We're building a plan now for the area on the chart that we want to see our trade hit, and then we're making a plan with good risk management. We're risking 1 to make 4 in this specific situation. All right, so this is like a live example right now of a trade I'm actually looking for. Now, of course, I did long the bottom here, so what I'm going to do is I'm going to add to my trade here. Hopefully, if I see something that will make me pull the trigger. Now, let's talk about resistances. Okay, I kind of went over this a little bit in last session, but on the higher term time frame here, we have ourselves our sideways range. Right, this is our sideways range. And within the sideways range, we have bullish market structure. Low, high, higher low, higher high, higher low, higher high. Then all of a sudden, we make a low, a lower high, a lower low. All right, so we've made a lower low. We've officially now taken out the previous higher low. And so we look to short a retracement. Well, where do we look to short the retracement? Well, we pull our fib from that high to the low. Remember, in a downtrend, when we're looking for resistance, we pull the fib from the high to the low. In an uptrend, we pull the fib from the low to the high. In a downtrend, we pull the fib from the high to the low. Why? Because we're looking for the high, the lower high, and then the lower low, right? And so we come up to the Fibonacci golden pocket. That's exactly where we reject from. Then what else can we do? We can take our volume, right? And in this instance, we don't actually, hang on, let me unclick extend, right? In this instance, we don't really have any Fibonacci confluences here. Let's see if we can find anything here. Okay, so, you know, and this is something I do quite often that I didn't really go over in the volume section, but you can look for like little chunks of high volume nodes, just like this right here. Like we see this high volume node right here, and you can say, okay, that's a little bit of a confluence there. But in general, you can make your trading plan be this. Because we've changed market structure, I'm going to be looking for a short between the golden pocket and the 786, and my target is going to be down here at the low of the range. All right, this is a 3-to-1 risk reward trade right here. So as we are basically coming down here, making a lower low, you're already planning for this to be your next short trade, right? And this works again on any time frame. You can see we're on a very local time frame, looking for a higher low right here to take it up to 100K, right? But keep in mind, this trade is still valid. Right? We might still do something like this. We might still continue high, low, lower high, lower low, lower high, lower low. And basically what I'm showing you here is, you know, don't be afraid to take trades in opposite directions as long as you know where to lock in your profit. This is why I do what's known as schlonging, where I hold longs and shorts at the same time, because on the higher time frame, this short is going to be valid until we actually make a higher high. On the lower time frame, this long is going to be valid until we make a lower low. So because I've already taken the long trade, locked in $3,000 profit, because I've already taken the short trade, locked in $9,000 profit, worst case scenario right now, I just made 12 grand. All right. My stop losses are in a place where you can see if I get stopped out of this trade, oh, whoa, where is my stop loss? Hang on. I might have just made a big mistake here. Stop loss. Oof, that's too high. Whoops. There you go. If I can, woof, man, that could have been bad. If I get stopped out of this trade, I'm going to lose $3,000 of my $9,000. So basically, I'm still guaranteed to make $6,000 trade. Basically, what you want to do is make sure your stop loss is either at your entry to make sure you're definitely getting that 9 grand, or a little bit above your entry to make sure you're still going to be in a good profit after that stop loss gets hit. So in this instance, I'm going to be losing $3 of my $9,000 on the stop out. So worst case scenario here, I make 6 grand on the short trade. Worst case scenario here, over here on this long trade, I'm going to probably be making, let's see where this 0.005 Bitcoin, that's like $500. So I'll be making, worst case scenario, if both of these trades get stopped out now, I'll make $9,000, worst case scenario. And so yeah, don't be afraid to, on the high time frames, take a trade and keep a portion of it open after locking in that take profit 1. And on the lower time frames, take a trade and keep a portion of it open after locking in that take profit 1. All right, this is actually one of my main strategies for not chasing price and FOMOing, is by just taking trades as they come, taking my take profit one. We'll get into that more later, and then letting the trade ride. But this is Fibonacci, okay? And when we go to the higher term time frames, all right, when you're finding major supports and resistances, you're going to pull these things on high time frames, like from the last major low to the high. Pull out your fib and tell yourself, man, oh man, major support is going to be between the 618 and the 786. Like, this is going to be major support right here. Even pulling them from the entire market cycle, from the low to the high. Now, I just want to point something out to you, that, you know, the 50K right now, let's say Bitcoin did top out here, 50K is going to be major support. Golden pocket from the bear market low to the high. I don't think we're going to top out here. But one last thing I do want to point out is the fact that if we go to the Bitcoin all-time index, every single market cycle bottoms out at the same fib level, which is between the 786 and the 886, without fail every single time. Look at this. Every single bear market bottom comes in between the 786 and the 886 fib from the bear market low to the bull market top. All right, so just if the pattern repeats, depending on where we come up to this cycle, right? Let's say we do come up to some crazy level like $250,000. If we come up to 250K, the bear market bottom is going to be around, you know, I'd say between 55 and 67,000, right? If we only top out at 120, let's say, then our bear market bottom could be $38,000. I know a lot of people don't want to hear that, but this is the pattern that repeats every single time. So fibs are very important. Just to reiterate, I have here the 618, a 0.65, a 786, and an 886. 886 is also one of the ones that you're going to have to add yourself. You're going to triple click it, do 0.886. You get very deep retracements from the 886. Other levels that a lot of people use, 0.5, 0.382. So this right here are pretty much the only fib levels I would ever use. The 886, the 786, the 618, the 0.5, and the 382. Now, what are these numbers actually? These are the percentages that the price is retracing. So if you get a move up, right, this is 100% of the move up, and then the retracement is a percentage of that initial move up. So if you come down to, let's say, the Fibonacci, the 618 and the 0.65, this is known as the golden pocket. It's a very reactive area where you're likely to get a bounce. This means you've retraced 61.8% of the initial move to the upside. If you get a deeper retracement, you've retraced 78.6% of that initial move to the upside, right? That's what these numbers actually mean. And this is how you're going to use them. So add it onto your macro analysis here, because when you come over back to, let's say, our chart where we were doing our analysis in the beginning, right? You have your weekly levels, and you have your volume levels, and you have all these high time frame levels here on the chart, right? You also want to be pulling your fibs out, high time frame stuff, to see, okay, where are we going to find those big confluences? Now, remember, I really want to drive this home when it comes to pulling your fibs. There's no right one way to pull your fib. If I was looking at this chart, I would pull a fib from here to here. I would pull a fib from here to here. Every major swing low, I'm going to be pulling my fib from every low to the high. Why? Because each one of these fib levels is going to be important. And so you're going to pull fibs. If you're in an uptrend, you're going to pull a fib from the low to the high, from the first higher low to the high, from the next higher low to the high, from the next higher low to the high. You're going to pull every one of those fibs, because you're going to look to see, do I have confluence with any of my high time frame levels along the way? Same is true for a downtrend. You're going to pull your fib from the high to the low. You're going to pull your fib from that second high to the low. You're going to pull your fib from that third high to the low, and you're going to pull the fib over and over again to get these levels, and you're going to be looking for confluences. Same is true for lower time frames, right? We're on the 24-minute time frame right now. You could pull your fib from this low to our high. You could technically pull your fib from this higher low right here to the high, right? And be looking for different types of confluences. Now, Fibonacci, volume, and high time frame levels are my three main ways to obtain support and resistance, and also just looking at my eye at the basic sideways range. What you know right now, so far in this course, and I mean this with complete sincerity, just knowing about high time frame levels, volume, Fibonacci, sideways ranges, and risk management, you're already ahead of the game. than most people who come to try and start to be traders. Because most people are going to sit down and you're going to learn about triangle patterns and you're going to learn about head and shoulders patterns and all this stupid nonsense that's going to get you wrecked. The information I just gave you for free, you're ahead of 90% of traders. Now, I made up that 90%, but trust me, a lot of people come to these markets and they don't know where to begin. And what I just shared with you is absolutely the secret sauce, because you know about the risk management, you know how to not get wrecked, you know how to manage your trades so that you're always looking to make more than you're losing, you're not risking more than 1%, and you know exactly where to look for a trade, because based on your technical analysis, you have those zones and the precise levels that allow you to plan for a trade with a good risk to reward ratio. And over time, that's how you're going to be profitable. So that is it for this session, guys. Make sure to check out Antarctic Exchange, link in the pinned comment and description. God bless you guys, and I'll see you in the next session. Peace.